Monday, November 7th, 2022, Maneco 64, home of alternative economics and contrarian views. So we're going to look today at who will bail out the central banks. Yes, there's a lot of talk, even in the mainstream right now, that central banks could go insolvent. And as we know, central banks are supposed to be the lender of last resort. And we're going to look at why this is happening. Before I start, I'd like to say that we have some affiliates, of course, that many of you know already, and they are precious metals dealers. Two of them are in the US, North America. They're ITM trading. You can get a free consultation with the team at ITM. Look below in the description. The details are in the description of this video. And I'm also affiliated with Miles Franklin. You can send an email to info@milesfranklin and tell them that Mario sent you there, or Maneco 64. And in the UK, we're affiliated with Gold Investments, and we have been for many years. Promo code there, if you do deal with them, is Maneco 64. And why do I have the affiliates? Well, because over the years, I've told people how I've been stacking gold and silver and the reasons why. And some people have decided that they want to do it, and they ask me, where can I get gold and silver? It's up to you. You need to do your due diligence, whether you want to acquire gold and silver. I'm not pushing it, but I think it's good insurance to have, especially when you will see what we're going to talk about today. And the other thing I would say, don't just use my affiliates because I tell you to. Do your homework, try to get the best deal, the best premiums, but make sure also you use reputable dealers. And I can vouch for all these three dealers. They are reputable, and you'll get a good service. Before there's Billy. We've been out this morning already. Some of you who are new to the channel have said, why is he making that noise? Well, he comes back, he goes to sleep, and he snores. He's done that since he was a puppy. He's almost 15 now. He's getting old. And yeah, that's Billy. So yesterday on the live stream, I do a live stream every Sunday at 9 p.m. London time. We covered some geopolitics, the German-Chinese meeting. The chancellor went there. But we also looked at something that Jan Neuenhuis from Holland, or from the Netherlands, covered a few days ago. And that was very interesting. And that's about central bank solvency. And you might ask, and it seems weird, because if a central bank is the lender of last resort, what happens when the central bank goes bust? And how in the world are we talking about this, that central banks now are going bust? We thought they could just create money out of thin air, reserves out of thin air, and they can. The thing is that those reserves are created out of thin air, and they have to be transferred to the banks. And the way it's done is through the central banks buying government bonds from the banking system. And this is what they've been doing, as you can see here from Yardeni.com. They've been buying all these bonds, the major central banks, since, well, the 08 crisis. They've gone from having 5 trillion of assets to over 30 trillion until recently. Now they're selling these assets. And why? Well, because prices are rising out of control. They never expected what they call inflation to really do anything. Last year, they thought it was transitory. They thought it was going to stay at zero, near zero forever. And they thought that their bond portfolios would not really move much, and that they would run off from their balance sheets eventually in the future. But we know that when prices rise, which we call it the consequence of inflation, a lot of people call it inflation, bond prices drop. And why is that? Well, because if the currency or the CPI, Consumer Price Index, is, or inflation, if you want to call it, is running at 10%, and you're only getting 1% from government bonds, investors are not going to take that. They're going to sell bonds. They will want a better return. And when that happens, the value of the bonds on the balance sheets of the central banks, they drop in value massively. We saw during the gilt crisis in September, October, that the 30-year gilt dropped to like from 100 to 50. So what happens is that the central banks, they have a lot of these government bonds and mortgage bonds, which have also gone down. Yet their balance sheet loses value, and their equity is very small. They don't have much equity. So when the loss on their balance sheet is greater than their equity, they become insolvent. Technically, central banks could operate being insolvent because they're God, right? Not really, but they lose all credibility. The currency that they issue, and I know that it's the commercial banks that issue the currency through giving out loans, but ultimately they're central banks. They back the whole banking system. And if the central bank is insolvent, the whole currency and system is insolvent. And what do you do in that instance? Well, can you ask the taxpayer to bail you out? Where is the money going to come from if the whole banking system is insolvent? Well, the article by Jan Neuenhuis talks about that. Dutch governor of the Dutch central bank states gold revaluation account is solvency backstop. So why is that? Well, because gold is the ultimate extinguisher of debt. It's payment. And that's why central banks hold gold, because they know under extreme circumstances, and this is an extreme circumstance, they will ultimately have to use their gold to reliquify their balance sheet. And how do you do that? Well, you revalue the price of gold. Yes. And that reliquifies your balance sheet. And this is what the Dutch central banker said here. This is, he was interviewed on television by someone called Buitenhof. It's a Dutch program. I've never heard of it. I don't live there. But it says, so what you're saying is that the higher the interest rate by the European Central Bank, the more expensive it gets for us. And it's not just a higher rate by the ECB, it's the higher bond yields as well. That's the president of the Dutch Central Bank, KNOT. He says, yes, that is correct. Interviewer, and the more money is needed. Hold on, I want to finish my questions. My question, so we all understand. And the higher the probability the Dutch taxpayer has to pay to fix the balance sheet of the Dutch Central Bank, of which I always thought, that's solid, it can't fail. This story is new to me, so this is not replying. The balance sheet of the Dutch Central Bank is solid because we also have gold reserves. And the gold revaluation account is more than 20 billion euros, which we may not count as equity, but it is there. Interviewer, but you don't want to sell the gold. And Not says, no, we definitely not going to sell. So right now, the rules, the ECB and the national central banks in Europe, the rules is that they can't use gold to be counted as equity. But in case of this collapse of the central banks, insolvency, they'll have to use it because, or else they're going to go out of business. And that's why they're holding on to their gold. That's not said we're not going to sell it. We have to hold on to it. Lo and behold, this morning, I've seen this article here in the Telegraph by Ambrose Evans Pritchard. Whoops, the central banks themselves may soon need a gigantic bailout. By pushing QE, the QE experiment too far, central banks have tainted the whole apparatus of emergency money. So, money, not real money, right? And he goes on to blame Ben Bernanke, and I agree totally with him. He mentions Ben Bernanke and that helicopter speech he made in 2002, which I've mentioned to you already. He looks at the Fed, which is $1 trillion underwater right now in its QE holdings. He mentions the Swiss National Bank, which has lost about 20% of the Swiss GDP in losses. They've been buying FANG stocks, as I told you already many times. It's lost $143 billion. And they've wiped out 3/4 of their equity, the Swiss National Bank. And it also talks about the Dutch story. and this is an interesting paragraph here by Mr. Evans Pritchard. He says, DNB, the Dutch National Bank, is exploring a revaluation of its large gold reserves as a solvency backstop. If the Dutch are having to do this, we can be sure that weaker central banks in the ECB network are in worse shape. It is likely that gold reserves will have to be mobilized in several states to boost equity capital. You like this last comment or statement? The barbarous relic may get its revenge on fiat paper. Well, I definitely think it will, because if the central banks want to survive, and they'll do this begrudgingly, but it will need to be done, it is to go back to the discipline of gold. And of course, Evans Pritchard talks about that QE was necessary in 08, but that the central banks took it too far. And that's the whole problem with fiat currency. You take it too far because there's no limit, there's no discipline, like with gold. And many people say that there's not enough gold, but it's all a matter of exchange rate. There's always enough gold, or else there wouldn't be any gold around, and that's why it's money. And gold gives the system the discipline. The problem is that the bankers and the politicians hate discipline. But unfortunately, they're gonna, unfortunately for them, fortunately, not just for people who've been stacking, but I think for society in general, this will be a good thing, because the way the world is running right now with insurmountable debts, inflation or rising prices, rising cost of living, is all a result of this abuse of the currency through QE, through the fiat currency mechanism, and the fact that we've had no anchor in the system since 1971. And before we go and look at the markets, I'd like to recommend Dan Oliver of Myrmikan Capital. I'm going to put a link to his website below. And he's talked about this, that eventually the central banks will go insolvent and they'll have to use their gold to revalue everything. And how is that done? Well, just like FDR did in 1934, they'll call in their gold loans to the bullion banks. They'll call in, the gold loans are the leases. And when they do that, the bullion banks are going to have to cover those shorts that they've created through those loans. And that will drive up the price of gold in terms of fiat. I don't know to what level, but a level that is comfortable enough for these central banks to have a cushion in their equity and on their balance sheet. What will happen to government bonds? Well, according to Jan Neuenhaus, they will become basically worthless, and the central banks. And I don't think this is only going to happen to the ECB. It's going to happen to the Fed, Bank of England, Bank of Japan, probably even the Bank of China, PBOC. And when is it going to happen? I don't know. I don't know, but it just goes to show that the system is in trouble, the currency, and that means the central banks. So we'll look at where the markets are this morning. It's 8:20 a.m. London time. So yes, we had a good day on Friday in gold and silver. They were up 3% and 7%, thereabouts respectively. Yes, they've come off a little bit today, but they're still, in relative terms compared to the lows from last week, they're doing well. Right now, spot gold is at $16.73. It's down about $8. High has been 82 and the low 66. Silver, yes, up 7%. It's down 1.5%, but it's at 20.54, down 31 cents. The low's been 37, the high 89. The Dow future is down 50 points. NASDAQ is down 26. S&P is down 8. I think we're down a lot more earlier in the stock market. We're down over 250 points in the Dow. So we've recovered a little bit here. To the currencies, yeah, we're seeing the currencies rebound as well. Yeah, I'm not sure what's come out. We'll probably find out after having done this video. But sterling right now is unchanged at 113.65. The low has been 112.89. And yeah, euro is unchanged as well, 99.60. It has been as low as 98.96. The dollar is up a third versus the yen, 147.15. The Swiss franc is down slightly at 99.31. And the dollar is up almost 1% against the yuan at 724.35. Let's check out the dollar ruble exchange rate. Dollar's down 0.5%, trading around 61.5. Aussie dollar, that's down 0.5% at 64.35. The dollar's up a third versus the Canadian dollar, 135.18. And the Kiwi dollar is down 0.5% at 59.02. To the general commodities, WTI crude is down 1% at 90.85. Brent is down 1% as well at 97.20. High-grade copper is down 1% at 363.70. And U.S. nat gas is up 8.5%, just above $7, so $7.04. That's a big move higher there for U.S. nat gas. Let's check out the TTF gas futures. Well, that's down 6% at 107, the European nat gas. And last but not least, and this is very important, seeing what's going on in the central banks, on the central bank's balance sheet. We're going to look at the bond market. The 10-year gilt yield, the UK government bond, is up 5 basis points at 360. The 30-year is up 6 at 383. And just before we look at the US Treasuries, there's an article here from the Telegraph yesterday saying Bank of England risks a repeat of mini-budget bond market chaos, warn city traders. So things are really uncertain. They're warning of a repo crisis as well. To the U.S. Treasury market, well, the 10-year yield is actually pretty steady. It's unchanged at 4.16. The short end, the 2-year, is up about 4 though at 4.69. So the curve is heavily inverted, which is a harbinger or a sign of a economic slowdown, I would say. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And with that, I wish you all a great day and a great start to the week. Take care. Bye.